we at NDTV Profit look at the impact that the rate cut will have on India. There's a general view that the rate cut could trigger outflows in the near term. My colleague Anushi joins us with the note from Citibank on this. Anushi.
Hey, so a US Fed rate cut is imminent as per the awaited one in the early mid-September as we are looking at. But let's understand what would be the impact on India, especially if you look at the foreign outflows. Citi, India's equity strategy note breaks this down. Now, if you look at the past 3 to 4 instances, out of this 3 have resulted in negative outflows. But do remember the short-term outflows that we are looking at is in the 1 to 3 month period that has happened. So this key driver for this has also been the global risk off scenarios, in which the 2008 scenario and the 2021, which was the pandemic, were the most pronounced ones. Do note that global risk off is when you're taking your money away from the riskier assets and putting it in more safer investment bets. But if you take the overall long-term scenario and look at the 12-month look, the foreign inflows have remained positive in most of these cases, with particular sectors over here, healthcare and the staples doing particularly well following the rate cut which has happened. Now, an interesting observation is in this scenario is that global peers continue to favor India versus the other emerging markets over here. So India continues to remain on a strong footing. But coming to what Citi's sector picks and their stock picks are, they have removed industrial and utilities from their sectoral preferences now. But if we come to the stock specific side of action, they've added HUL in their large cap list, while Bharti Hexacom makes it to the mid cap space as opposed the initiation which has taken place. But continuing on the key overweight sectors and the key underweight sectors that one should look out for, banks, insurance, telecom and healthcare remain as the key overweight sectors, while on the underweight side we have consumer discretionary, IT services and metals making the list. So this is the overall impact that we are looking at for the foreign outflows. What could be the trajectory in the near term and the long term view, and what are Citi's top picks in this scenario?